Hello, my name is Dr. Maya Byfield. My business is The Phenomenal STEMist. I'm so excited to be here in Orange County because it's where I live. I live in Apopka, Florida. And I decided to make this business because I saw a need for underrepresented students to be successful in STEM, which stands for science, technology, engineering, math. And the best way I can do that is just provide products for parents to prepare them, whether it's a book or online STEM camps or just video podcasting. My goal is to transform this community, especially those who are underrepresented. And the way to do that is to help parents understand their children's minds and basically develop them at different stages of their lives to be prepared for a successful STEM career. Thank you so much. That's why I'm here.
Hey, 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 hey. How are you doing? It's the Phenomenal STEMist live on Phenomenal Financial Freedom, YouTube, and LinkedIn. How are you guys doing? Hope everything is well. We're talking today about the 9 stages of the bear market. 9 stages of a bear market. Yep, yep. Just to give you a little bit of homework, don't forget to buy the book, Phenomenal STEMist. It's available on Amazon as we speak. If you have students who are interested in being in STEM, that stands for science, technology, engineering, and mathematics, do me a favor and join. I'm looking at my video to make sure everything is working well. Yep, everything is good. Also, subscribe. If you're watching from YouTube, LinkedIn, Facebook, please just subscribe. Subscribe to my YouTube channel. Click the notification bell just to see all the programming that I'm doing not this Sunday, but the first Sunday of the month. I'm having a guest host, special guest host. My friend Howard Webley will be interviewing yours truly to talk about my path. So I hope to see a lot of you out there. But we're gonna jump right in. We're gonna jump right in talking about the 9 stages of a bear market. 9 stages of a bear market. So like, what is a bear market? Like, what is a bear market? So the definition of a bear market. The first thing you need to know, the definition of a bear market is 20% or greater decline from an index's previous high. So we are in a bear market. 20% down. Let's say you have $1,000 and you lose 20%. Like, let's do the math. Let's do the math. Science, technology, engineering, math, that's finance, that's your money, right? So if you have $1,000 in the stock market, if you put this thousand dollars in the stock market a year ago, this S&P 500 is down 25%, I believe. 25% the year of date. So that means if you put the money in the stock market a year ago, $1,000 like in a low cost index fund, you would only have $800 in there, right? Because 20% of 1,000 is $200. So you would have lost $200. So imagine if you had $10,000, then you would lost $2,000. Imagine if you had $100,000 in there, and you would have lost $20,000. So yeah, the more money you have in the stock market, the deeper the cuts, the deeper the cuts. I'm telling you. But that's how life is, you know. When the stock market has been up for the few past 10 years, on average, if you did it right, if you could have made 30% per year, right? So if you had $1,000, then you would have had $1,300 by the end of the year. Or if you had $10,000, you would have 13,000. You had extra $3,000. Or if you had $100,000, you would have had extra $30,000, right? So like you like big wins, big losses. So 20% or greater from the previous high. And according to all three markets, the Nasdaq, the S&P 500, and the Dow Jones, they are all currently in a bear market. I'm reading an article coming from MarketWatch. This article was written, I think, in August. So this is a pretty recent article. No. It was last updated on October 19th. So literally today. It was first published yesterday. So I have a new article, brand spanking new article, discussing the 9 stages of the bear market. And so currently, as of today, we are in a bear market. I believe I said before, 25%, 25% down in the S&P 500. And that can hurt. But as my flyer says, don't panic. Don't panic. So what are the 9 stages of a bear market? Number one, the 9 stages of a bear market are, the first is failed rally. So what happens is when you start seeing a bear market, you start seeing people like boost up the market. People are making money in the market. You're like, "Ooh, yay." But unfortunately, that rally, when I say rally, I mean basically the market's going up. The market's going up and people get excited. They get a false excitement. Now, if people are telling you there's a recession coming, if people are telling you you're in a bear market, I mean, um, well-known people who are well versed in the stock market, if they're saying, um, yeah, you're, you know, you're good, you're well in the stock market, then you might wanna I mean, sorry, not well. Things aren't going well in the market. You might want to believe them and say, okay, we're in a bear market. All right. So the rally doesn't last that long. As soon as you make $600,000, next thing is down for a week. Like one day is like a couple of days, you get so I've seen that happen. Number two, low volume rallies. What does that mean? That other bear market clue is that stocks move higher on low volume. Low volume, meaning not a lot of money in the game. Not a lot of money in the game. So financial institutions, big people, a lot of people who are well known, they're not buying. They're saying cash is king. You hear people like Warren Buffett or other people like who've been in this game for a long time talking about cash is king. Or you hear Jamie Dimon from J.P. Morgan keep saying we're in a recession. It's a mild one, but da 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 da. If people aren't buying and only riffraffs are buying, that should be a sign that we're in a bear market. Unfortunately, people who are underserved and underrepresented are the last to know about everything. So when they're hip to the game, it should be a sign. That's kind of unfortunate. We got to be better at that. And the only way we can be faster to the get hip of the game is if we do research ourselves. If we wait till something gets popular for us to start joining, a lot of the time that's too late. Popularity is too late. And unfortunately, people who don't want to take the time to learn things and to get high level knowledge, they only come when it's a fad. And fads are always late. Fads are always late. I don't know. We keep falling for the falling for it, but if a whole bunch of people that don't normally get in the stock market are in the stock market, that should be a sign because everybody else is out. Everybody else is out. I wouldn't say. Let me rephrase that. And I'm saying the wrong term. Not out of the stock market, but they're not doing a lot of buying right now. There's low volume rallies. Number three, terrible looking charts. I mean, if you see red everywhere, it's a sign. If a lot of companies are losing money, that's a sign we're in a bear market, right? Rallies start to make it look a little green, but overall, if you look at year to date, it's pretty bad. It's pretty bad. I think I'm gonna show a chart. Let me show a chart of the S&P 500 year to date, right? So I'm gonna share my screen. Share my screen. Hold on. So S&P 500 year to date. I don't know if you can see that. Can you see the whole thing? I don't think you can see the whole thing. So let me open it up a little bit. So yeah, this is the S&P 500 in one day. Let's go 5 days. Oh, ooh, ooh, we made 5%. You see what I'm talking about? That's the rally. Short-lived rally, right? A short-lived rally. 1 month. So in a week you made 5%, partially because JP Morgan went up. So, if you kept sticking with JPM in spite of all the turmoil and let the dividends keep buying, so I'll talk about that a little later, then you would have made some money in this week, right? Because there was a rally with the banks. But that's just for 5 days. You can't get too excited because if you go to 6 months, ooh, that's ugly. That's ugly. 4,500. That's ugly, right? Now it's at 3,700. And year to date, and see, it's even worse, right? The high was 4,700, and now it's 3,700. You understand? The S&P market is down 1,000 points, my friends. 1,000 points. That amounts to 23% down. We are in a bear market. You see that? That's an ugly chart. It's an ugly chart. Yeah. Terrible looking charts. We're in a bear market. Number 4, strong sell-offs. Extreme, like what is a sell-off? A sell-off is when people had a high and they started just selling their stocks so that they can make money on for what they made over the past few years, right? So it's been a couple of years since we've had these sell-offs. I remember when COVID happened, it was like a big drastic dip. See, I don't panic, y'all. I told y'all not to panic back when COVID happened. Came right back. It's like a V formation. However, now it's selling off again. It's selling off again and getting to new lows. New lows. That's a sign. That's what we're in, according to Market Watch. They believe we are in the 4th stage of the bear market. 4th stage, meaning there's 9 stages. There's 9 stages, and we're barely halfway through. So we gotta be you gotta be careful. You gotta be careful. I love Jim Cramer. He says bulls make money, bears make money, pigs get slaughtered. Like you can make money in a bear market. You can make money in the bull market. You don't make as much money in a bull market, a bear market as you do a bull market. But if you're greedy, you get slaughtered. I'm not greedy. So you got to be careful when you're in a bear market so that you can continually still make money. Number 5, we haven't done this yet. Number 5, they say that this hasn't started yet, but that's going to soon start. mutual fund redemptions. When people start seeing 22% down, 25% down, 30% down, who knows how long it's going to go, people will start getting worried, especially those who have to retire within 5 years. If you have to retire within 5 years, you got to be careful about being in the stock market. You know, if you need the money, you got to be careful about the stock market. Now, I don't believe the stock market should be timed like that, but I also know that, you should have a mindset of I'm going to live forever. I'm not going to live just for retirement, right? So you want to have an era of a level of safety, but at the same time, you want to exist 30 more years. Let's say you're 70 and you're retired. You still need money to last for 30 more years. So in theory, the stock market should still be you should still be in the stock market long term. But it's just you have to manage it properly, like your retirement money where you have to live off of immediately versus some other levels of money that you can live off of over 30 years. It's about balance. It's about balance when you are when you're dealing with your life. This is just life experiences. This is not financial expertise here, right? You should always get a financial advisor to know what you should do. But the key thing is, at this time, in not yet, as soon as it's going to come, people are going to start selling their mutual funds. Horrified investors are going to throw it in the towel. They're going to sell off their mutual funds, and mutual funds will be forced to sell, and then stock market crash again or go down, right? So that hasn't happened yet. That's what Market Watch is saying. That's what's next, right? And then number 6, people start panicking. Then so more and more money starts leaving the stock market, and they're like, "Oh my God, I had $100,000 in there. Now I only have 80. Now I only have 70. Oh my God, oh my God, oh my God! I need to retire in 2 years. I need to retire next year. I need the $100,000. I need the $2 million. Whatever they have." They sell, they panic, they panic, they panic. Bullish investors like myself holding on for dear life, but I'm not buying. That's me. I'm already in stage 6. I'm already in stage 6. Like, I keep myself diversified. I keep myself in the proper numbers, but I'm living my life. I'm traveling. I'm thinking about real estate, right? I'm not putting all my money in the stock market. I've never have. But my retirement account I have, and even then, I'm mindful. I'm just keeping myself balanced. I have a chart that says this much has to be in stocks, this much has to be in cash, this is my level of risk, and I'm sticking to it. I'm sticking to it. I'm letting my dividends buy though, right? I have dividend stocks. So the more the stock market crashes, the more dividends I get, the more stocks I'm able to buy because it's cheaper than before. I'm not panicking. I'm not trying to have the money in the next 5 years. I'm not trying to have the money in the next 10 years. I'm not having trying to have the money. I'm getting old, huh? Maybe in the next 25 to 30 years is when I'm going to need the money. And even then, I'm going to add another 30 years to that because I plan, if the Lord should tarry, I'm an Adventist Christian, so I believe that the world's not going to last forever. But in reality, if I live till I'm 90, I have to consider that I'm 45 next year. I still got a lot, 40 years left, over 40 years left. And so I can't panic about today when I just know I looked at Warren Buffett, I look at this, I look at that. I just like They made most of their money in their 50s because they let the money compound. They did not, even during the depression. These men who lived in their 90s lived through the depression. They've seen multiple bear markets. And if they not moving, I'm not moving either. I'm not panicking. Why? Because number one, because all my money is not in the stock market. I'm not a gambler, right? I have a business. I have stock market. I have my house. I have my pension, right? I have savings. I have the Lord Jesus Christ. There's no need to panic. Matter of fact, in a bear market, it's not good. I'm not. Why would I sell a really great company? I believe it's a great company. I mean, I have a bank in my portfolio. When the crash was happening, there was only two things open: the hospitals and the banks. Everything shut down, but I saw lines across around the corner of the bank though. I saw the pharmacy open. The hospitals were open. Everything else was closed. Hey, I think as long as this world is going to last, the banks are going to last. So why would I throw them away? I just leave it's nice to see. It's nice to see, and I'm not giving financial advice. I'm just saying it's just nice to see when you have a good company, whether it be certain types of technology companies that are necessary, right? Whatever company you believe are too big to fail, if they're too big to fail, they're most likely may not fail. Not to say that there aren't companies that have failed, right? You put yourself, you put, at any rate, at any rate, my whole life isn't in any company. But I think the point is, I think it's gonna last 40 years. I think it lasts 200 years. I think it's gonna last 40 more years. That's how much more years I have to live. And I think the companies that I have stock in are gonna last 40 more years, and that's really at least up to my legacy. I'll pass it on to others to see, maybe hopefully it continues. Don't panic. But panic is coming. We are not even in. Hey Tyreek, good to see you. Good to see you. Listen, you especially, people who are in their early teens and 20s. Oh my goodness. If you have a job, you need to have a Roth IRA. You need to have some kind of investment account because you have time on your hands. The earlier you start at 25, just putting $100 away. I think I put this on my Instagram accounts. The Susie Orman says it all the time. You start at 25, you have $1,000,000 at 65. If you start at 35, you only have $300,000. Just according to the standard of what we've seen over the past few years. So that means you've lost $700,000 just by waiting 10 years. Just for an extra $100. Listen, earlier you start and you just sit, even in the midst of the panicking of other people. That's coming. That's number 6. Panic is going to come in a bear market. We're not even there yet. We're in stage 4. But what do? Think long term. Number 7. Everything in the news is going to be bad. Everything in the news is going to be bad. You're going to, especially during a Republican Democratic fight for Congress and Senate. Oh boy. Oh boy. So I think that in combination with the political climate, they're going to make every economic news bad. We're in a bear market and we're in a political climate where somebody's trying to win the Congress. So trust me, you're gonna see, oh, stock market crashes, stock market crashes, stock. You're gonna see inflation, inflation. They're gonna be news everywhere, everywhere talking bad about the finance. You think it's bad now? It hasn't even happened yet. That's what they're saying. Market Watch is saying we're only in stage 4. We still haven't gotten to 5, 6, 7 through 9. Yep. Number 8. Number 8. These are the 9 stages. 9 stages of a bear market. Finally, the bulls will stop saying stuff. I'm not a bull or a bear. I'm a long-term investor. I'm not a personal, professional involved in the stock market. I can't predict what's going to happen to say, "Oh, we're going to make 10." But I know in the beginning of the year, everybody said we were going to be 10% up, right? So, or was it was low. I think it was 5% up or something like that. But the key thing is there's going to be a point in time when the bulls say stop speaking. The trading volume will be down, bulls will not be buying, and you're going to see, I mean, up to 30% loss. Ooh-wee. And they start selling. They start selling. Selling. You seen the last Great Recession, remember 2008? 2008 was bad. People lost 50% of their money, man. I sold before the bear market. I sold in October of 2008, and it was my worst decision ever. I sold Amazon. I sold Apple. I sold Mastercard in 2008. That was my worst decision ever. Ever, 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 ever. I sold because I needed the money to live off of because I quit my job right before the recession. And so it was I needed, but truth, you know, I can't look back. It was the best decision of my life to quit my job, but the worst decision of my life to use my stocks to pay for that decision. I should have just, um, I just didn't know. You just don't know. You don't know. You think about it, it's like, well, I had a car payment, right? And so I needed to make sure I had a year's worth of car payment money in the bank. And I remember they said, listen, if you need any money within the first 5 years, if you need money in the first 5 years, you need to sell now. And I guess the point is this. I didn't need the money as bad as I thought I needed it. So what I will say is this. Really, really dig deep in your heart to find out if you really need the money as bad as you think you do. That's the key thing. Because I would have been a millionaire if I kept buying Amazon. Amazon is thousands of dollars right now. Matter of fact, it's back down to 100. This is the time to get Amazon. Matter of fact, I think. I don't know. I'm not telling you what to buy. I'm just saying there were some stocks that I sold in 2008 to live off of that I wish I hadn't, because if I had them now, they would be very worth a lot of money. My point is bear markets don't last forever. Yeah, hindsight is 2020, Tyreek. Hindsight is 20. I love that I quit. It was the best decision of my mind. And it was I made the right decision. And it was a great financial decision to quit the job and get a new one. But my point is, you don't need, listen, live off of peanut butter and jelly. Don't sell stuff that can be very lucrative in the future. Number 9. Number 9, the last stage of a bear market is capitulation. So after weeks and months of sell-off with a little bit of hiccups and downs there and there, all the investors are panicked. Investors realize it'll take years before their portfolios break even. And then trading volume is more than 3 times higher. New believers come in, right? True believers, they're down maybe 40%. Lord, Lord, Lord. Every asset is falling, they say. It's all red. Except for like CDs and stuff. CDs never make really money anyway. Yeah. And then the traders, the people who are trading, and still trying to time the market, they feel hard paid. And that's the end. That's the capitulation. People like it's over. I'm never going to catch back up. But guess what? In 2008, people lost lots of money, right? By 2011, they got it back. By 2015, like people who, and remember, like you buy low. This is the time to buy low. You buy low, you sell high, but you buy low till you're old, right? You buy low and hold till you're old. When you say sell high, it don't mean sell high this year. It don't mean buy low now and then when the market goes up 500 points, you sell high. That's not how I take it. Is you buy low, hold it till you're old, and then sell it when you need it for retirement. Long-term strategy. So what are they saying in Market Watch? Market Watch is saying that this market is very young, right? Lots of failed rallies right now. What should you do? This is what they say. This is the 3 things they think you should do. In bear markets, you got to be diversified. You could diversify. Some stocks are doing well. Be diversified. You dollar cost average. Meaning, what's a dollar cost average? Meaning you consistently put money in your account every month, whether it's up, whether it's down. So when it's down, you're actually making money when it comes back up. Dollar cost average. Close your eyes, hold your nose, and keep that risk portfolio in your mind to say, if I want 70% stocks and 30% cash or whatever, it's different. People have different 30% to 10% bonds, 30%, 20%, whatever they have, gold. Then you keep that percentage the same and you add money to it. And if the percentage shifts over, like usually my company says if it's way over 5%, you need to get it back to under 5% shift. And you just keep dollar cost averaging all throughout your life. Number two, sometimes people say keeping the savings, cash is king. That's fine. Stay on the sidelines in the early stages. That's what I did. All through this year, I haven't been buying a lot. Just living my life, enjoying my life, building up cash, traveling, giving to charity, paying my bills, making that money via the business, right? Diversified other ways of making money, speaking. Like there's other ways you can make money. Number 3, build a strong cash position. Unfortunately, there's a lot of inflation, so it's like, what do you do with that? But some people want to use cash to buy real estate. Some people are looking for the recession to happen next year, so they want to have a good down payment for their real estate. The role says number 3 says the goal is not to lose money. So in a bear market, cash is king. That's what they say. So inflation, which is I think 8% right now, is not as bad as a bear market, which is 20, 30, 40%. So you don't want to be buying high right now. You don't want to be buying in the high You want to be careful in bear markets. Cash is king, they say, in a bear market, outside of dollar cost averaging, right? So if you're doing like a, let's say, any questions, guys? I see a couple of you watching. Any questions? Feel free to ask. Let's say, the Roth IRA requires that you put $6,000 tax-free growth, right? So you want to put $6,000 in the Roth IRA. So that's $500 a month. You just put $500 a month. You don't necessarily have to buy stocks with the $500 a month. You could put it in the savings account of the Roth IRA. $500 a month. And once you start seeing your risk tolerance shift too much, right? You just put a little bit of money to bring it back into balance. You just balance your portfolio. You keep your portfolio in balance based on your risk tolerance. And you do that every month consistently, no matter what the news is saying, no matter what your friends are saying, trying to get you involved in pyramid schemes and cryptocurrency. Not to say that cryptocurrency doesn't have a role, but just be careful of running to and fro based on popularity and fads. That's ultimately what I'm saying. And stick with things that have proven the test of time. Tyreek, you are in school right now. Do you know how many people are saying there's no reason why you should go to college? You should just get a social media account and blow up using using social media. I got a little cash via my Facebook Reel account. It's literally like $3 or something like that. But people acting like they're making millions on their social media account, and there might be some people that are making good money, but I'm telling you, the test of time that has been shown is a college education, especially in STEM. That's the test of time. But you know what? That requires hard work. That requires studying. That requires knowledge. That requires discipline. That's what you roll with. So does the stock market. It requires study. It requires research. It requires discipline, patience. So you do both education and the stock market and real estate and entrepreneurship and charity and like just diversify. Don't panic. That's my point. This is a long-term game, not a sprint. All right, y'all. It's been great. Just to remind you, 9 stages of the bear market capitulation. That's piece everybody gives up. Number 8, bulls throwing the towel. They've been fighting all this time. They finally be quiet. Number 7, everything you see on the news is bad, according to economics, especially in an election year. Number 6, complacency starts turning into panic. You just see people panicking and selling off their stocks. Number 5, the mutual funds they they start selling because everybody starts selling their mutual funds. Number 4, their immediate sell-offs. Number 3, terrible looking charts. Everything looks down. Number 2, which is in the beginning, there were like few little rallies. People started getting excited about the little rallies, but they're low volume, meaning there are not a lot of people in the stock market, especially not large financial institutions, just the people who came in too late. And number 1, a bunch of failed rallies. They start, but then they stop. Don't get caught up in a bear market, y'all. Cash is king. Be patient. Dollar cost average, and everything will be all right. I hope you enjoyed this very important video. Let me see. I see a question out here. It says, "Yup, hear it all the time, especially in boot camps." Okay, boot camps, computer science boot camps. Like, you don't need education. You just need a computer science boot camp tech certification. You'll make a lot of money. Listen, ain't nothing wrong with a few certifications now. Get that education, especially if you can get it for free. All right, y'all. It's been fun. It's been real. You guys have a good night.